Welcome to this week's Pascal's China Lens. And just a couple of weeks before the Ant IPO was halted, every day people were asking me how to buy stock of Ant Financial. Everybody wanted to be part of that new IPO, historical IPO. But then it stopped. And so I'm going to give some reasons or some background in this video on why I believe the Ant Financial IPO did not happen in Shanghai and Hong Kong. Now, 2 days before Ant Financial was going to go public in Shanghai and Hong Kong, the Chinese regulators told Ant that they wouldn't be going IPO or doing an IPO in Shanghai. They didn't follow or comply with the regulation, the new regulation that came out just a week earlier. And so sorry, but check, you're not going to be able to go IPO, go public. Big deal, because this was going to be the biggest IPO in history. Ant Financial was going to change the whole financial world, and ultimately it was an IPO. We were talking about $35 billion that was going to be raised at a valuation over $300 billion, and it was oversubscribed almost 1,000 times. Everybody wanted to be part of it. But it won't happen. And so what is behind all this? And so there's a lot of speculation, conspiracy theories, and people saying that it's primarily an internal matter. This is about a fight between the Communist Party of China and the technology companies like Ant Financial and Alibaba and Jack Ma in person that is basically not taking care of doing things according to the regulation. And it is some truth in that. There is truth in that, in the fact that most of the policies in China is defining capital and the markets, and not the other way around like in the US, where policy is often defined by money. But on the other hand, it's not just that. But if you look at purely the internal, the big issue is that Alibaba, its imperium, with Alibaba and Ant Financial and Cainiao and AliCloud and all together, is almost worth 1 trillion, 1.5 trillion, depending on how you calculate it, which is about 10% of the GDP of China. So yes, it is a very, very tall tree that is catching a lot of wind, as they say in Chinese. And so yes, they're very visible and vulnerable. Now, the second reason that people often give is that it's a geopolitical thing. With all the tensions between China and the US, the regulators in China, the government, the party, they want to be very cautious not to rock the boat. Specifically because there are now this decoupling strategy from the US. But when we think about financial markets, that's a big risk for the US. If companies and investors are now investing their money in Shanghai and Hong Kong instead of in New York, that could shake this whole financial market and capital markets. And that's not something that China wants to show to the world, that they're really trying to change the whole financial setup that is there today. No, they want to attract capital to China. They want to show they open up their market. They don't want to have that message coming across. Specifically, when this would have happened, this IPO, at the same week as the election in the US. And at that time, they didn't know, is Trump or Biden going to win? Now it's clear Biden is the winner, but at that time, if it would have been Trump, I mean, this would have just created more tensions between the US and China. And so a lot of people are saying this is geopolitical, and the Chinese government, the regulators, they didn't want to take the risk to do it now, maybe later. So that's the second reason. The real reason, in my view, is the third one. And this is purely a matter of regulation. And if you've seen what's happened in China in the past many years, you've seen that this financial stability has been very, very shaky. Specifically, the debts have increased in China a lot over the past 10 years, but also there's been a lot of shadow banks. And the biggest problem is the peer-to-peer loans. I've written a lot about it in my book, China's New Normal. And there were about 5,000 of these companies giving loans to consumers, to people that need this, to small businesses, and the loans came from money who made some money before or from institutions, and a lot of them run away with their money, a lot of them went bankrupt. Now we're talking about a handful of companies that are still okay. And so this peer-to-peer loan system has created so much worry with the regulators that this hurts the normal small people, the investors, that they didn't want Ant to become another Ponzi scheme like many of these were. And so this is probably the real reason what happened. Now, from the Alibaba or Ant Financial point of view, I think the real matter is the fact that Ant Financial is a technology company, it's not a bank. And so that is difficult for regulators to understand and cope with new regulations to suit that new world. And if you look more deeply at the problems that Ant Financial had to comply with the regulations to go public, what you see is that they had about 5 things they didn't comply with, but the biggest one was the microloans. This was their loans, their P2P, you could say. It's not P2P, but it's an investor or an institution that gives money to a person or a company, but it's going through Ant, and Ant is moderating this whole or managing this whole operation, and they earn some technology service fees through it. And the problem is, for these loans, traditional banks, they need about 30% that is reserved for all the loans they have on the books, and Ant only had 2%. So they were lacking like 28% of assets on their books to be able to do these loans. And that's because they're a technology company. They're enabling others to make this all happen. And so almost 40% of their business, their revenue in Ant Financial is these loans. So that's quite a lot, 40%. So that's the biggest issue. They could comply with that. It would take a long time. It would cost probably 16 billion US dollars, which means about half of what they were going to raise. So it's not going to be solved immediately. They will take a long time, maybe 6 to 12 months. But the real issue, in my view, why this has all happened is because there's a cultural clash. There's a cultural clash between the old world and the new world, between the old world of the banks and the institutions and the regulators that are used to give loans to state-owned enterprises in China or people who have assets, and they need to now do regulations for technology companies, a technology company that is structured completely different and that is basically more an enabler than actually someone who has the books. And they're offering a lot of microloans as well. And if you look at the people getting the loans in China, it's a lot of small loans. So it's people that just get a few thousand euros or a few hundred euros, or it's companies that get some thousands of euros to fuel their business. So it's not a big risk. But according to the regulators, if you take so many people, it is becoming a big risk, and that needs to be managed. The biggest issue that China's regulators have is that Ant doesn't have skin in the game. They don't have a vested interest. They are not part of this deal. They're just enabling it. And that's a new world of technology where regulation should be verified by technology, by AI. So they calculate the risk based on data. They don't calculate the risk based on people like the regulators and the banks do. So this is a new world that these bankers have not gotten used to. And so Alibaba and Jack Ma at one point said, if the banks will not change, then he will change the banks. And that was not a very smart thing to say. So he thinks technology should be developed. It shouldn't be regulated. So there's a lot of disconnect between technology world and the banking world, financial world. And I think this is a worldwide thing. But China with Ant Financial is one of the biggest challenges. And that's probably why it was halted. The other thing, there's a clash between the old customers and new customers. New customers being millennials, being people that want a little bit money, but they want it fast and they want to have this fluid. But fluidity in China on cash and money is also a problem because the Chinese government is worried this money is going to go abroad and not come back. So a lot of issues, but it's all to do with this new and old world. Now, for me, I believe that the biggest mistake that Jack Ma did was not to show why he actually could be beneficial to have Ant Financial go public to these regulators. And so he should have shown much more gratitude towards China that gave him the space to explore this innovation and create completely new business models in order to create a new financial industry or a fintech industry in China. But he didn't do that. There wasn't much gratitude in his last speech. The other thing is, he should have talked a lot about the fusion between technology and the banks, something which he's actually doing pretty well, but he was kind of saying, yes, these banks are old, and if they're not going to change, basically, let's forget it and let's replace them. Not the right message. And finally, he should have said what Ant's purpose is: to change China. Because what Ant is doing is creating a lot of money into the economy by giving these microloans, and because of that, the economy is booming again. And after COVID, this is going to be critical for China, that they get all this fueled up again. And so Ant and Tencent and a lot of these companies are critical for that revival post-corona. And so he didn't talk about all this. He was just bashing on these regulators. Now, I don't think this is the main reason. I think the P2P, peer-to-peer headaches that China had is the main reason why they just stopped this IPO so abruptly. And I believe in 6 to 12 months from now, Ant Financial will go public again. The valuation might be lower. Now, if you would just take out those 40% of the microloans or loans that Ant is doing, and the rest, 60%, they're really complying with all the regulation, you would still have a valuation of $200 billion. It's not so small. So give it 6 months, 12 months, Ant will figure it out. They will talk with the government, and my expectation is they will go public in 2021 without any doubt, but it will be at a different conditions. So I am very bullish on the future of Ant. I just think this was the time for the Chinese financial markets to figure out, and give them time to figure out, the regulation between the technology companies and the old world, and to make sure both the investors and the people who receive the money, the people who save the money, that they're all safe for their future of a new world of fintech. So I hope you liked this week's Pascal's China Lens on Ant Financial's IPO and why it didn't happen. But I do believe this is a critical moment in time in history where you could see that the regulators in China are trying to catch up with the speed of technology and innovation of the fintech world in that space. And so this could become even a standard worldwide in how the new regulation could cope with the speed of technology. So hope to see you next week for another episode of Pascal's China Lens, and do not forget to subscribe to my channel if you haven't done so far.